Cryptos could soon be heading to your retirement fund. 401k provider For Us All is teaming up with Coinbase to introduce the Alt 401k plan. Enrolled members can transfer up to 5% of their 401k balance into a secure account with exposure to a list of 50 cryptocurrencies. While the Bitcoin boom has cooled off lately, Ether and Dogecoin have still been to the moon this year. Bob Bassani, is this the single most irresponsible thing you've ever heard?
So what's an asset class? An asset class is stocks and bonds and cash. I guess you could say real estate is an asset class, commodities maybe. And what's the purpose of an asset class? It's to diversify your portfolio. That's why you have different asset classes. So, for example, how about collectibles, coins, stamps, rock posters? If they diversify your asset base, yes, okay, I consider them. So here's the problem with Bitcoin. Could it diversify as your investments? Could it serve as a diversifier? It certainly could. The problem is the volatility is so crazy that most people would advise you to stay away from it. That's why they're putting that 5% limit in there, and they're acting very paranoid about making sure people aren't going to go over that 5% limit. Personally, I would tell people to stay away from it, but I can see why people are interested in the possibility of getting more people involved in their retirement funds.
Kate Rogers, what are your thoughts?
So to Bob's last point there, getting more people and younger people in particular interested and involved with their retirement fund. I believe the company mentioned 20 and 30-year-olds, their interest in all of these alternative asset classes and Bitcoin in particular. So if it gets you more engaged with your 401k at a younger age, that could be a good deal. But the 5% guardrail does seem smart, as Bob also mentioned, considering all the volatility that's going on, as a way to kind of protect your broader 401k and all of that investing and time you're putting into it. I don't know that I'd want to risk it all on something like that.
Contessa.
Well, I think that the democratic access to vehicles for speculation ought to be available to all. Democratic access to all.
I feel like that's a stump speech or something. Like you want to.
I'm working on it.
Yeah, it's not bad, but I guess, Contessa, here's the thing. It's not like people are saying you can't invest in crypto. It's the question is whether a 401k fund should be harder to put something like that. It's not just that it's speculative, it's still so new. I mean, a lot of these are truly untested.
That's true, but they also argue that it's a hedge against inflation. And because we're watching CPI come in and we're watching the cost of things go up, if you're a young person and you're wondering how fast your money has to grow to keep up with inflation, a hedge against inflation seems like a good idea. The fact that they're capping at 5%, to Kate's point, is the way to keep things safe. For the 401k managers. It'll be interesting to see whether we see other big 401k platforms following suit.
Yeah, I absolutely think this is a marketing move. I wanted to pick all of your brains before we pick the brain of the company itself. We're going to be talking to them next hour during our special crypto hour, the crypto craze in Power Lunch today, the CEO of that 401k provider. All right, let's move along. Talk about our next topic here, which is Starbucks. Kate Rogers, the Journal is reporting that it's running short on everything from syrups to oat milk, even to cups. They're actually even pausing production on some less popular items right now, concentrating on only the biggest sellers and blaming these shortages on suppliers amid the pandemic. Kate, they're saying it's just a temporary problem that varies from store to store, but I guess this is an unusual phenomenon for Starbucks because they're supposed to have the most leverage out there in the market. They should be everybody's best customer who gets all the stuff first off the line, right?
So, Kelly, I think there's a few different things at play here. As you mentioned, the company won't confirm specifics in terms of cake pops or cups on what specifically is being shorted across the country. But I know on my own app, I've gotten shortage notices on things like certain iced teas that I've tried to order. Oat milk, Oatly, remember, they've teamed up with that company, which recently went public. There have been some shortages with that. Ongoing supply chain issues. Business is really booming at Starbucks because the country's reopening, people are going back in, and they're really buying a lot there. So that's one good thing. But there are also some labor challenges in the supply chain. As you mentioned, Starbucks is huge. It should be everyone's biggest customer. But I don't think anyone is safe from the ongoing labor challenges that are being felt everywhere across the board. Starbucks isn't the only company that's brought this up. We've also heard it from places like Papa John's and their supply chain. Wingstop mentioned it with the chicken wing shortage that's been going on. So I think that this is being felt particularly hard in the restaurant industry right now, but it's really widespread, and we continue to talk about it on the air.
Contessa, what are your thoughts?
Well, I think if you look at a place like Buffalo Wild Wings in Las Vegas had to post a sign saying, we're out of wings because of a wing shortage. We're going to close tonight at midnight. If you have to close early, if you can't give people the core product to what your business does, it is going to affect the bottom line. And furthermore, I think that I think some of these retailers could risk losing customers for the long haul if they go and sample other competitors across the street because of these supply chain disruptions. Yeah. I think that this is a real warning sign that this could hit the bottom line.
And Bob, I want to give you a quick word on this quickly.
The cups will return. The little ketchup things will return. Don't panic. This is a good moment to look at reusable objects. They use 7 billion cups a year. 7 billion cups a year. Reusable cups, they're allowing them back in. I think it's great. I'm not necessarily carrying around a reusable cup, but a lot of people I see walking in Starbucks have the little metal reusable cups that they have. I think it's a great idea to start looking at that. Right. I know I'm throwing in a little point here, but it's a good moment.
As long as they're not reusing the cake pops, you know what I'm saying? I mean, you can do it with some parts of but you can't do it with everything else. Kind of speaking of the supply chain, JP Morgan left the UPS Investor Day yesterday with a little bit different impression than everybody else. They said they're impressed. They upgraded shares of UPS to overweight today, saying the new mantra of being better, not bigger, and concentrating on more lucrative deliveries should lead shares higher over time. They also like the pricing power, improving efficiency, and the dividend yield. They upped their price target to $243 a share. That's $40 above where we are now. Bob, after the shares got hammered today because people didn't like, for the most part, what they heard. So a different point of view here from JPM.
I have to say, I was totally confused on what the messaging was on this. Here's the one thing that I did take away. I'm a big dividend guy. UPS pays $4 a year right now. That's a 2% dividend. Believe it or not, that's a really good dividend. The S&P only pays 1.3%. It's terrible these days, the dividends. So they talked about the idea of perhaps going up 80 basis points, paying out more of their cash flow to the dividend. Could go to 2.8%. 2.8% dividend, believe it or not, is top 20%, top 100 in the S&P 500. You're just below the food companies, the utilities, the REITs. That could be very, very attractive to the dividend people. That's the one thing that I took away that I thought was kind of interesting.
I think some investors go, well, is that really the best use of cash? You know, you're up against Amazon, you're up against FedEx, and granted, they've been outperforming FedEx this year, Contessa, but they go, maybe you want to invest that in taking on that, you're taking on Amazon. That's a tough competitor.
But I think the real key here is pricing power. If you have figured out how to execute prices that are going to cover the costs, then that's key. And they said that the cost efficiencies that UPS is finding can drive margins higher here. I think that's worth noting. I think the price is key.
Shepard Smith here. Thanks for watching CNBC on YouTube.